Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile for structure in the intraday developing time frame. This stream is about getting in alignment with the market, how the market works, how you might get in that alignment, and also build out the business side of trading. That means structured trades that you vet that have a statistical edge. In addition, the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience and share and learn and debate and grow together. If you're interested in a community where there are serious traders looking to build out the business side and an understanding of the market mechanics and how the business of trading works, then you're all invited to Trader Lab. In addition, this stream's based on structured trades that are available to everyone that visits the Bookmap Trader Lab. And there's no cost. There's 60 PDFs of these trades that you can download and reverse engineer, plus a library of webinars that go over these processes. Every day the market is different. However, something needs to be anchored. In the casino business, and I always like to start with this, what comes out of the cards, the deck is random. How the gamblers play the cards is random. That is called gaming. However, how does the casino extract dollars from the gamblers? It's because they only play games that have a statistical edge, and they play them exactly the same way. They accept that they are in a random environment. They have no control over what comes out of the deck and no control on how the gamblers play the card. So how do they extract dollars from the gamblers? Because they only interact with the gamblers with a structured game. And we, if you accept that this is a random environment that we operate in, then should only interact with the other participants when a structured game or structured trade shows up that has a statistical edge. That is the business, in my opinion, of trading. And of course, past performance is not necessarily indicative of future results. So let's get going here. Let me take care of a little business, and then I'm going to get into this morning's trades, many of which I post and narrate in the Bookmap Discord Trader Lab chat. Now, they're not trade recommendations, but they are to help traders follow along as the market develops. Now, as day traders, you need to understand what is your time frame or fractal. And this is really difficult because what one trader does, another trader may be trading inside of those rotations. So if you're a higher time frame trader, in other words, swing-ish trader, other traders may take 3 or 4 trades inside your one rotation. How do you sort this out? Well, that's part of what you need to do with your trade plan. Part of your trade plan is to figure out where you fit. And this is psychological alignment. And that's a big piece to this. How do you groove? It's kind of like just your rhythm. And can you get a sense of rhythm and timing and comfort mentally? It's dancing, if you will, with the market. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If I get into something interesting, we can observe it together. In addition, so you guys are aware, there's a special series that's taking place in the Bookmap Discord server that you're all invited to review these, and they're available at the end of the day. You can go to bookmap.com, and it's on trade management. So it's a full series. It's going to run this week, and be sure to go to bookmap.com YouTube channel and check these out if you're interested in trade management. I think there's many different ways, as they say, to approach the topic. And again, you have to find the one that generates the metrics. So let's get going. And as always, I tend to follow process, which means I do the same thing. And why do I do the same thing? The casinos do the same thing. I do the same thing. Why? If the market is random, I cannot add to the randomness. I have to try to be consistent. Otherwise, I have no way of measuring the outcome. Gamblers win, by the way. That's why they come back to the table. And yet, what they tend to do is if they walk out with some cash, then they're going to make their game a little better. You know, I had a couple winning hands, but then I lost on the others. Or, gee, I walked out and I made $100 or about, pick a number. And then they tweak and tune so they can get better. What do retail traders do? Tweak and tune to try to get better. And that's called curve fitting. And curve fitting is basically taking the past and trying to put today's behavior into yesterday or the day before or the month before. And in reality, the market doesn't work that way. Yet we do that with our indicators and all of our mechanics and our need to be right and our need to predict. Why do the casinos not need to be right? Why do they not predict? It works for them. You know what they do? They accept the random outcome of any interaction. They only play games that have an edge. We are not doing that as retail traders. Unless, of course, you come to Trader Lab, and then maybe you'll see there might be another way to do this. But if that's what you're doing, I call it Trader Groundhog Day. And what that means is you're always chasing the market from behind. You're using lagging inputs to give you a red light, green light process where the market doesn't work that way, in my opinion. So that's what Trader Lab is built on. It's to help developing traders understand the business of trading, market mechanics, and how at times you might get aligned with it when you have a structured, vetted trade plan and structured trades that I share with you in Trader Lab. You can reverse engineer and then fit it into wherever your groove is. So let's go take a look. Now I'm going to give you some statistics. Let's take a look at a couple things here. This is the ETH, or overnight volume point of control. Here's why it's important. In the ETH, this is where the high volume was. So that's like retail. And trading is very much like shopping, in my experience. This is yesterday's highest volume. It's called the naked volume point of control. Point of control is market profile term, and all it means is high volume. And if you want to think of when you go shopping, it's very much the same. Trading is shopping. And what are the shoppers trying to do? What's too high? What's too low? And too low means it's on sale. And if the perception is it's underpriced, when it checks retail and we get the ETH low, that might be too low. Now, we don't know where it's going to be, but then we come back, maybe too low. Then in the ETH, we do our thing. Our highest volume is here, the overnight volume point of control. These are pretty much the same, okay? We opened above. This is the RTH open. Now I'm going to give you some ideas of where this thing might go. This I don't believe is correct. Let me get this out of here. At the stale location. This is a micro composite VPOC. You're going, what? Let's get into the thought of fractals. Fractals are Russian dolls. That's what a fractal is. Rotations are not time-based in my world because the clock doesn't define participant behavior. Now, you can use anything you want. Doesn't matter to me. I'm just talking about me. I found that being rigid and trying to fit the market into fixed structures was not how the market really operated. Now, you can tear it down and put it back together, whatever works for you. It's not a comment on that. I found that the participant behavior or the rotations are not time-based. They are rotationally based. So it's a fractal. In other words, it's just inside of itself. And fractals are like Russian dolls. Think of the big one going down to the little one. The little one is exactly the same as the large one. In this world of trading, what is the large one? Here, this is called the microcomposite volume point of control. And it's taking the volume in of the most recent consolidation of RTH days. In the developing time frame or intraday developing time frame, we are using the same processes in shorter time frames. So it's all generic. So, well, ETH low. Okay, that's nice. Too low, open, potential to check lower, check here. Who knows? Overnight high, potential target. Of course, we're opening there. Then what's left? What has happened the past couple days? What happened last week? Anybody remember? Big selling, right? The market goes up to go down. Did you remember that the market also goes down to go up? If there was a geopolitical reason and the market got extremely short, sellers become buyers to cover their positions. What started yesterday? It was our buying. What is going on today? Our continuation of the buying. Where's yesterday's high? Here. What's above yesterday's high? Stops. What's next on the hit parade? This, which is a low volume node in the higher time frame, and typically we trade through them or test them, and then we can revert or whatever. And let's go higher. What's the next target in the higher time frame? This. Okay? So this is the lay of the land. Now there's more. This, I believe, is still valid, but this is the primary target. Okay, guys? So coming in, if you're in Trader Lab, this is before the market opens. And don't forget, we had report at 8:45 Central Time and then I think 9 a. So that's in the mix also. So is everybody tracking? By the way, if you have questions, post them. Tapish, thank you. I already forgot. You'll have to remind me again what I'm reviewing in Trader Lab. And guys, if you have questions, please post them on YouTube. If you're new here, if you're in YouTube, welcome to the Trader Lab. Remember, there's a link in the bottom of YouTube so you can access the Bookmap Discord Trader Lab chat. There's no cost to access the resources, which are structured trades, 60 PDF, 60-page PDF of structured trades. You can reverse engineer, plus a library of webinars on this process. So let's go. RTH open. Now, there's two possibilities. And you're going to go, really? And I'm going to go, yeah. Why are there always two possibilities? Now, this is going to sound like brilliance to you. Well, the market can go up or go down. Okay. You're saying, boy, what a guy. Well, this is what that means. When we come into the RTH, we already know the lay of the land. We also know the market was long yesterday, and we know shorts are in the market. Remember? That's what I started at the top of the stream. By the way, you can review this stream if you're in Trader Lab. It's available exclusively to them. And you're all welcome to be part of Trader Lab at no cost, and the community and the rest of it. So if we know these things, if we get sellers first, what might that set up for us? Two possibilities. One, sellers, and we do the Acapulco cliff dive, always possible. The other part is we get sellers who are taking profits ahead of these reports, and then those sellers get absorbed, and then the real move happens. Then we have stops from the early sellers at the opening swing high. And this is called the opening trade. And the opening trade is a specialty trade. And I always encourage traders to learn to read the market because of its speed, but not to be complacent and to think of this in multiple time frames. And in Trader Lab, if you are trading this and you don't have a good grip on it, it can be a very expensive place to operate, but it's a very good place to narrate because of its speed. And trading is very much about understanding and reading the market and developing unconscious competence. So 8:30 coming up, RTH open. Here we go. And remember, post your questions if you have them. 1 second, please. Let me just make sure I've got everything working here. Okay. Yeah, Tapish, I don't remember what I'm going to review because I can't remember anything, but thanks. Okay, so we're looking for this is a high probability statistic. Now, the fact that we're opening here and this is here, I got nothing to do. You know, it's like we might get here or keep going. I don't know, right? And by the way, if you were to ask me, what do I know? My answer is going to be, I don't know. And you're going to say, well, why are you doing a stream if you don't know? Because the truth is, we don't know. So if I know I don't know, just like the casinos know they don't know what cards are coming out of the deck or how the gamblers play the cards, it's random. So I don't know. But here's what I know. I know what I will do when my structured trade shows up. And then it's my choice as far as what I do. So let me talk to you about my trades. The first trade, I'm going to go with whoever takes control, and I'm going to be looking to get long for all the reasons I already mentioned. What I don't know is, I'm trying to get this thing sorted out here so you can see it. I don't know what's going to happen, right? So am I going up or going down? Great question. Overnight high is a target. Let me show you the order flow. This is Bookmap, and this creates edge. Oh, really? Yeah, really. How does it create edge? Because I can see what others don't see. Now, I can look over here and try to see what's going on my dome, right? Limit orders. They're adding and pulling in it. That's crazy. I don't want to see that. I got to be looking right here. So this is the heat map. It is showing me the liquidity that's sitting here in the limit order book. Okay? And right now, this is the stop and iceberg detector. I got a selling iceberg selling into these buyers. Is everybody with me? This is the developing market profile, volume profile, and all it shows us is volume and price. That's it. Nothing more. Okay? And this shows me the same thing, and this all resets at RTH open. So zero volume, and now this is moving up. This is called the developing volume point of control. Let's go back to our Russian doll idea. This, and I showed you, remember, the micro composite volume point of control, 5103, which is a target. I showed you the overnight volume point of control and yesterday's RTH, which volume point of control, which we are above. So I know, and this is the same thing, except it's in real time developing. So I am using this to try to interpret, and I'm underlining the term try, to stay in alignment. So this says higher. I have a target. I have liquidity. So now let's follow the first trade. So I have nothing to do. And I'm sitting here and I'm chomping at the bit. Buyer, buy stops, selling iceberg. Watch. Now I'm going to take you into order flow and reading structure. Not saying this is anything anybody ought to do. What do I know? Buyer. We have an iceberg, I believe, sitting in here. That's what this is. There he is. He executes. You can see it here. Stop at iceberg detector. 300 sold here, another 249 here. There's your buyer. The iceberg took the other side. Okay? Liquidity in the book. Target. Now, it's a target I can't trade to. If we had opened down here someplace, I would be then going for this because it has a high probability statistically. And you can get your hands on these statistics in the Bookmap Discord Trader Lab. And of course, you have to vet them, and past performance not indicative of future results. It's all random. Right here, I break below. Now look at the pieces. So this is too high. Iceberg selling, liquidity in the book. Now, this is my retail price. Remember how shopping works. If this is too high, I can break below it. If I can't clear it, it sets up a potential short. So let's look. Let me start labeling some of this stuff. I'm getting lazy in my old age. This is called the variable high volume node. What the yellow line is high volume. As the market develops, and I do this here in the minutia, I'm doing this mentally, you might say, as the market's going, because when this thing is running, I could be getting in a trade in 2 seconds after the open. And again, I'm not saying you should. I'm just saying what I might do. What do I? So let's look what this says. Too low, too low. Now right here, it looks like it might be too high. Hold this, too low. Sellers got absorbed here. That's what this says. Sellers, why aren't we going down? There's limit or passive buyers on the other side right here. This moves higher. This moves higher. VPOC migration. Let me label it. Now, I'm showing you this because this is a generic process. Now, at the open, so you know, it is very sensitive because there's no volume. And this is the next location. So as we're moving and the volume is coming in, if price and volume move together, it is saying, yeah, okay, we'll buy it at this price. But here's what happens when you go to the store. If you go to store and the price becomes too high, we will have some buyers up there. But you'll notice the volume up here. Where's the buyers? So right up here, I got the iceberg. I'm just giving you a little sense of what's going on. Now, these guys up here, these buyers are stuck. Now I get my sellers. This now is support. If this is too low, we need to hold it and come back here and clear. Remember, 5103, I think, is the target. So, but what this sets up for me is a short or not. Or, let me give you the or. This is the beauty of trading, guys. Or nothing, and you're looking for the long. What is your plan? Now, I trade, whatever. I just follow my plan. My plan says you can get short. VPOC migration. Too high. So what this is saying, and this is micro, we are in 10 seconds, okay? I'm already short. Not saying it's a good idea because I want to get long. So I could be hanging out, working on my crochet, and looking for a long, or subject to my ability to trade in this thing, short, picking up a little bit of, few option, let's just say a couple ideas, and looking for continuation down to get some of the longs out. So these buyers under the bus, thanks for playing. Your broker sends you a gift basket. We come back here. We are checking this volume. Here, this is important. I see absorption. This is my first, quote, indication, no indicator. This is absorption. This is a detector. So I see absorption, but I have VPOC migration, pressure. So I'm looking for it to continue, but this puts my antenna on alert. So let's just look. Too high, VPOC migration. Sellers, looking good, Lewis. Absorption. Too high. Too high. So let's watch. VPOC migration. Feeling kind of groovy. Opening swing high. Let's not forget opening swing high. Why? Why? Whoop, get over here. Sorry. This is very important. The opening trade, I perceive it to be a high risk, high skill endeavor. What I know is here, now I have an opening swing high. And what was this? Opening swing low. Buyers here had their stops here. Okay? Let's label this. You say, really? And I'm going to go, yeah, let's do it. Whoops. Let's make this the, for now, the opening swing low. So opening swing high, opening swing low. So what I know is buyers, stops. If I got long, this is high probability to get lambasted. Here I get short. I am looking for longs. What do I know? Stops now are up here. Okay? Important not to forget, not to get myopic. So I'm on this short. I don't know. I think I posted this. I can't remember. I mean, I don't remember, guys. I just kind of go with follow the yellow brick road. So this is too high. This is now retail. As long as it's going lower and I stay below this high volume, remember what the market says. This is language. I'm not paying that. The shoppers leave. They go down here and auction. You're crazy. I'm not going to pay that. I can get it for less down the street. How about here? I don't think so. What about over here? No, man, forget it. Sellers, let's be sure. Nope, forget about it. Trapped. Lower. Watch. Liquidity. Huh. Look at that. Why is this in the book, you say? Why? Why was this in the book pressing? Why was this liquidity in the icebergs up here selling? Why is this too high here? And why right here is it time to get out of Dodge? You ask. And what is my objective here? My objective is to get long. My other issue is I am short. So what do I do with this trade? Let's look at it. So liquidity here, sellers. This is important right here. Order flow, guys. Bookmap. Buyers. So I got my sellers here. I get my buyer here. Sellers are in control. Order flow. The book thickens up. Now, there's no way to know what will happen. The term being what will happen. Not a fortune teller. Don't have a Ouija board. And the magic 8-ball always says, ask again. We had one on the trading desk. I always like to talk about that because it was a lot of fun. Should I buy it or sell it? Should I get out? Flip it over. It says, ask again. Great. So that didn't work. Okay. So sellers, buyers. This is right here. It's contested. See it? Sellers, buyers, sellers, buyers. Now watch. I got to show you something else here. Buyers, sellers, buyers. Microstructure here. Now, no way to know. What I know is this. That's what I know. And I know this. Break. What does this tell us? These buyers and this liquidity was absorbing these sellers. These guys are now trapped, and there's more. Buying iceberg here, and only 2 sell stops, 4 sell stops. Stop an iceberg detector. What does this tell me? If I see a seller here, there's probably or potentially right here, this is the delta, 100, and this is going to be counting both of these in here. So basically, there's 152 sellers right in here. Get this. These guys. Iceberg took the other side. I'm taking my time. I want you to see how you can read an order flow tool and how you put it together. And also why I was short and why I'd be getting along. Buyers take control. So who's stuck? These guys are on the hook. So this becomes a long. Now, the developing volume point of control is here. If you got long, this is your obstacle right here. This is called mean reversion. And then what do we know? We know, so you'll see the reaction. In other words, retail price. Is this too high? Notice the reaction. This is our volume, developing volume point of control. What is it? Retail price. Here, it was too high. Remember how the shopping experience works. Down here, we only had, it's showing 5 went off here. Now, if I open this up, you'll be able to see it. But I'm not going to, only 5 of them went down. I'm not going to go further with this, so I spend too much time. I just want you guys to see the broad strokes. You could learn much more about this in Trader Lab. So right here, sellers, buyers nibble, not so much. Sellers, iceberg, exhaustion, liquidity, change. Whoops. Back to retail, bounce off. This is a long in the Trader Lab. So if you can't get long here, you've got that against this volume right here because it changed. Sellers, boom. Where's the stops? VWAP, mid. Where's our variable high volume node? We got one here. Last place, it was too expensive. So we're going to label it, right? Because we're tracking shopping. And I'll speed up here. I just have to break it down for you at this stage. Now, where's our opening swing high? Right? What now? How do you might think? The sellers in this leg have their stops here. Retail trader behavior. If I get long, I'm coming here and I am going for those guys. And I am going for yesterday's high, which I think is there. This. That's my trade. So to me, it was a pretty good thing to do. What do you think? So we're now in 1 minute and 30 seconds. Lovely. Watch. Okay. So rolling along, having a great time. Yeah. Okay. So here, get taken out. So long, scale, hold, going for the opening swing. VPOC migration, looking good, Lewis, right here. Looking for it to take it out. Watch. We come up here, right? Here. This is a location. Notice where we come. This was the first retail price that was too high, and we had our sellers up here. Stops are above here. I come back to it exactly right here, and it repulses it. This here, exit, breakdown. This sets up a possible short subject to your time frame or nothing. If you're a rotational trader, you could take this. Now the longs in this leg get taken out here. Now I'm only giving you ideas. Whether or not you trade these doesn't matter. You might just put this thing on, put your stop under the ETH low and go to sleep. Some traders in the Trader Lab will do that. Not my thing. And now here's the other possibilities. You want to be long. When you come under here, you exit. That's that. And now you're looking for it to come out to get long again somewhere. Or if you are a counter trend trader and you're comfortable with these rotations, you take a short. Just, whatever your thing is. As you guys know, I Well, it doesn't matter what I do. But the thing about this is you need to understand the context. Context is the market is short from last week, right? There's shorts in the market. We have a target above us at 5103. That's important. And if we come outside, which is what this is, we want to get long. If we come outside, we want to get long. If we can counter trend trade, which is subject to your skill level and statistical edge, you could be selling this to get long. Same trade as I took earlier, getting short to get long. Getting short to get long. Or skip the shorts and just get long, right? Watch. Now, 8:45, we have a report. Now, this trade, I think I narrated this because I can't remember. Let's look. Sellers. Now, in the Trader Lab, guys, if you look at the chat, because I was posting all this morning, you can let me know if I was talking about this one. I really can't remember. Just don't. And I can't look at my, my thing, my trades or anything. Besides, I also take trades that are not Trader Lab trades. I trade inside of these structured trades. Sellers get trapped here. So you got sellers here, sellers here, sellers. Where's the buyers? You're saying, where's the buyers? I don't know. Liquidity in the book. Liquidity comes in the book. Let's see if we get any reaction here. Because if so, then potential to come back here. Let's see. This is a long. And you can see why. See this leg? Sellers. See this? Buyer. These guys are stuck. Let's watch. I get sellers here. Let's look. This comes in the book. Order flow, iceberg, buyers. So stuck, sellers, long, stop could go under here, target, mean reversion, outside in trading to there. Your scale could be here in case you get selling, which didn't make sense to me, but hey, doesn't matter. And then this, that's the mean. So with this trade, now we're going into a report, right? So you have choices here. You can exit here, or you're risk neutral and you got a few hamburgers on the in the skillet and you trail a stop. This is all subject to plan. So let's see what happens here. Where's my opening swing? Here. Where's my stops? Right there. See it? Next target. $8.45 is the report, right? What happens next, you ask? Well, here. Let's look at this one. So long, now you see this, right? If you have Bookmap. If you don't know about it. What do we see here? And then I'm going to look up and see if you have questions before I go on to the other trades. Remember, yesterday's high is a target. So you have decisions to make in your trade plan. Are you trading in just what are you doing? Are you just going to go through counter rotations and head for this because there's buy stops? Maybe. Or, and this is where you need a plan. You don't make it up while you're trading. All the work is done outside of trading time. So you know what you're going to do. And by the way, if you don't know what you're going to do, you have no business being in the market. Absolutely not. Because you're on your way out of the business if you're doing that. Because you're just basically playing the video game. And that's, you're with the gamblers. And, over time, maybe not the right place to be, but that's up to you. Not up to me. Liquidity. Absorption. Right here. Buyers get absorbed. Who's absorbing them? Icebergs. You see? Icebergs, liquidity, absorption. So you have a choice. 845 is the report. Get out here. But you're going for that and 5103. So what do you do? Now I'm going to look up because I can't see your questions. VWAP long. What time was that, by the way? Tapish. And in YouTube, if you have questions, there is a delay. Hope you guys are doing well in YouTube. Welcome to Trader Lab. Please give a thumb up if you find this useful, interesting. It encourages Bookmap to allow this stream to continue. Yeah, I'm getting the question from Trader Lab Balian. Good question. How do I mark the opening swing high and low? It's not time-based, it's rotation. So I really look at the first rotations where the opposite force came in. So if we open higher and drive up, I'm going to mark that low as the opening swing low. It's not, it might change, but I know that the buyers in that up leg have their stops under that low, at least the weak ones. And then if we rotate down, I'm going to mark the top of that first up rotation, because if we rotate down, that means shorts, and then the buy stops will be above the top of that rotation. And let's say we went down and then came right back and rotated up, then I'd move my opening swing low down. You know, I'm just trying to box it in because it's two-sided trade. So, but I know that the opening swing high has the stops above it. So when I'm coming up, if I'm bullish, and I am, because of this, right? So if I'm getting outside trades, mean reversion, I'm going ultimately for this and 5103. Which, again, I have no idea. Here's something everybody should write down. We don't know if, we don't know how, and we don't know when. It's all random. So I can have a target here and above, but I don't know if we're going to go down 20 points and then come up to it or never. That's the thing about trading. We cannot predict. We can only try to understand market mechanics. We don't know the path. We don't know anything. The casinos don't know the cards that are come out of the deck or how the gamblers are going to play the cards. If they don't know, how can we know? You see what I mean? So all we can do is try to get in alignment. And how do we do that? Order flow, structured trades, statistical edge, and not playing in traffic when we have no plan. In the Trader Lab, I encourage traders to isolate one structured trade, and I share 60 PDFs of these trades. You pick one, because if you can't develop an edge on one, you will not develop an edge on any. You pick one. It is a template so you can build a business. If you're in a hurry, that's FOMO. You're on your way out of the business. Just an opinion. Just happened. I've been doing this 44 years. Now I'm going to suggest I've seen this game, if you will, and this story over and over and over. Human nature never changes. The compulsion that more is better is not true in this business. Less is more, because you develop expertise and unconscious competence in one place at one time. So here we have a seller, they're absorbed. Here we have a buyer, they are absorbed. Key. We have the report coming up. What might you do? Well, this is a tough one. How about maybe get out, subject to your plan? Does your plan tell you to trade in front of reports that can be material? I don't know. What do you know the answer to that? If you don't have an answer, you need one. Just a friendly suggestion. What is this? Seller, buyer. So right here is a fight. I look at this and I go, shootout. The buyer got absorbed. The seller got absorbed. You see the green box? That's buy absorption. That's sell absorption. So two sides. Break high. Buyers. Looks like these guys are getting pushed out. 43 stops, selling iceberg. Now let's look. So right here, and I get my buyers here. We need this. Watch. Too high, going into the report now, and it doesn't mean it won't, whatever. You see the too high. You see the volume. This is microstructure. This is a fractal. Different conversation. If you're in Trader Lab, you already know what this is about. There's my sellers. These buyers are trapped. What's in this leg? Stops. These guys. The market goes up to go down. The market goes down to go up. Fuel. Retail. Let's watch. Market comes down. Report. Bullish. So, what's a prudent thing to do? Get out here. In front of the report, no short. Just hasta la vista. See you later. Then we get this. Now, that's the report. So now, let's look. I know I got long for this, and I can't even remember how I did it. I'll have to go back and look. Now, I got out, and here we pull back. There's my buyer. Here's my consolidation. This is a long for me. And the stop went under here. Okay? So it was kind of a big stop. But why would I do that? Target. And I want you to know, I take pretty quick scales, all right? And my stop actually went under here. That's right. Yeah, I ran it very tight. And this is why. Aggressive buyer, reports out of the way, 132 buy stops go off, 18 down here. I'm above my retail price. There's my buyer. What else do I know? In this leg, I've got my sellers. I got my sell stops in this leg. I got my buy stops in this leg. They become buyers. This, bang, okay. I'm still under here, so I know there's stops here. So it gives me a way in. And here you see selling and stop sweeps. Do I worry about that? I worry about everything, and then again, I can't do anything about it. So long this. Now, let me explain this. If you're looking at this, you see the aggressors. You see this is a sweep also. Nothing traded here. Chop, chop, chop. Micro consolidation. Let's look at this in microstructure. Let's come into now the fractals. Let's go to fractal world. Fractal world is this. This is high volume, right? Right there. If this is high volume and I break above it, it is saying that this is too low. There's my buyer. Now, right here, I want to get long because of my targets, but it could do anything. So this is volume. There's a breakout of the volume. Long, stop. And then I'm looking for, to get risk neutral. And what I do is wherever I get in, my stop has to go here. And I want to do, and I know this is here. So I'm looking at this. We have 1,000 icebergs went off here. Gee, 600 here. Yikes. They're getting consumed. Notice what's going on here. Buyers, sellers. We are above them. Buyers, sellers. Buyers are being absorbed, and there's more buy power to keep going. So you've got these guys selling icebergs, and the market's still going higher. That is showing me strength. I'm going for yesterday's high. Let's look at this. Selling icebergs, almost 3,000 here. That's a lot. 240 here. Liquidity comes in the book. Now, this is a trade management opportunity for you. And this is all about plan. Buyers are here. Okay. Almost 3,000 icebergs. Stomach gets a little knotted up right here. Liquidity comes in the book. Not thrilled. The buyers take another shot. Selling iceberg, sweep in the book. Right there is the seller. Got to clear this and notice the liquidity. Seller, exit, or, see, this is the thing about a trade plan. This is an exit, or you ride through the counter rotation subject to your plan. And it could do anything. So let's watch. Pullback. Now, before I go on, questions. Okay, so I got that Balian. Okay, 9:58 Eastern, 8:58. Okay, so we're coming up to it. So right here is the mid and the VWAP. Out here is high volume. This target 5103. So what do we do now, you ask? We try to get long. So for me, I got out here. I'm not saying you should get out here, but I tend to be someone who just, I'm an active. So I just sort of, I'm not trying to catch everything, because if the target is still out there and I have structure that supports, so don't forget, the longs are in this leg, their stops are out, down in here. So I want to see I want to look for a long. Let's look at it. I posted this in the Trader Lab. I thought you said 858 Tapish, no? This is a long. So let's look at why it might be a long. I hope you guys are getting something out of this. So we come inside. Let's look. So we know about this, we're out of that thing. And here, let's watch. Too high, micro high volume, seller. This is the volume. Come back and check it. Right to the volume. In other words, the sellers. Buyers try here. No bueno. Sellers. Micro high volume. This is a trade management process if you vet it and align it with your time frame. I don't know if they're doing a special trade management series this week, but I don't know how others do trade management. This is something that you might look at, because I'm using structure and participant behavior. Buyers, no bueno. See you later. There's your seller. High volume here. Test it. This is the same as testing the VPOC. Remember? Micro high volume. It's fractals. Russian dolls. No buyers. Seller. Where's the volume? Here. Where do I test? Here. Where's my buyer? Nada. See you later. Thanks for playing. We're going to send you the parting gift. Look forward to that gift basket and the coupon for the Omaha Steaks from your broker. Volume. Liquidity comes in the book. Sellers. Now what? Location. Mid VWAP. Structured trade potential in the Trader Lab. Now, sellers. Watch. And I think this was the trade tapish, right? Isn't this the one that I posted? How are we doing in YouTube, guys? You guys getting something from this? So watch right here. Sellers, this guy's absorbed. I should say buyer, absorbed. Sellers in this leg. They are in control at the moment. Let's watch it. Location. Trend? Up. All we did yesterday's high is test back inside the range. Now, I have no clue. If you ever ask me, do I know? I'm going to say, yeah. One thing I'm absolutely sure about, I don't know. So it's not for me to be right. It's not for me to have an opinion. It's not for me to be myopic. It's for me to be completely open-minded to what the participants tell me. And then I'm attempting, underline, to interpret what I see. Sellers are here. Liquidity comes in the book here. You got liquidity up here. These guys are absorbed, these buyers. So you got your sellers here selling iceberg. You got liquidity in the book here, buying iceberg on this side. It's kind of like Battle of the Bands. You guys have heard that, right? And what is the trend? Maybe up. So let's watch. Here, buyer. These sellers now are stuck. These guys pull. This is still in the book. Long, stop under here, and then I'm looking to come back up to the high volume. Which is this up in here. Then, there's more. This here migrates. VPOC migration. You say, oh, really? This becomes the target. And then there's more. Now we have liquidity. Watch. Now here, looking good, right? Feeling good, Lewis. Here, watch. Now again, subject to your plan. 5103 is my target. I'm only going to give you an idea of what you might do. You might be long and your stop's way outside of all this. Or subject to your skill, and this is something, that takes some time. And I mean think of going to university. Think of becoming a doctor. Think of becoming a professional in a sports team. So, buyers looking good, Lewis. Liquidity here. Feet up on the desk. Buyers. Nothing. Selling iceberg. Liquidity is up here. So, sellers. These guys now are under the bus. So what you can do with this is it's either trade management or you're just way outside of the noise. Let's watch. This is retail. So possibly if this is too high, and where's our fuel? In this leg, and I come down here and I check this price and it's too low, we can buy it for a continuation trade. And why would I do that? I'm going to bring you back to why. Because that's my target. This sets up a long. So this is a structured trade in TraderLab. We come back, we check it. I have my sellers here. It looks like it's going to fall out, and maybe it will. Don't know. Buyers, these guys are stuck here. Let's watch. VPOC migration. If you didn't get long here, you might get long here. Your stop's under here. And these are not trade recommendations. Where was it too high? Here. Where's my stops? Here. I got taken out of this one. Pull outside. Now, this one I believe I narrated. I can't remember these things. Yeah, I did, actually. I think so, guys. Trader Lab, did I talk about this one? Coming out towards the outside edge over here, the LVN and VPOC. So here's what this is. I'm looking for the continuation trade. Okay. Get taken out. Okay, no problem. I believe I got scaled. It doesn't matter. Let's assume I didn't. Okay. This, come back here. Outside edge. Let's look. We had a report at 9 a.m. We pull out liquidity, iceberg, sellers here, too high. Now, what is the condition of the market? We want to be long only, or unless you're a rotational trader. Sellers are here, and this creates something called mean reversion. It's outside in trading. That's all this is, outside in. So right here is long to there for scale, and then we're going for our target. Scale. Where's our stops? I think I'm getting caught up, right? And look what we run into. This. Now, let's talk about this. Now, I'm taking you into some different topics today because I just want to show you ideas. There's no right way to trade. I mean, I don't know the right way to trade because what's right for me is not right for you. You know, for me, I read this and I go, you know, liquidity, fine. I'm okay taking this off here. It doesn't matter to me. I go, okay, boom, buyer. I'm seeing my buyers and sellers interacting here. Who's winning? There's my seller. These buyers are stuck. Here's my test of the volume. Exit. Check of the volume. I know I got back in on this somewhere. Can't remember anymore. I can't remember, but I think, I don't remember. I just can't remember this stuff. We came down here. Now, this is not a structured trade in Trader Lab, but it is for me because if this is too low and I got my sellers in this leg, here's my sellers down here. Notice the change in behavior. Buyers, aggressive. Sellers are stuck under here. This sets up a long for me. And we have something else here. We have something called the IB30. At 9 a.m. Central Standard Time, the high at 9 a.m., which is this, if it gets taken out, then there is a high probability, past performance not indicative of future results, that this, the first hour high, will get taken out. So I know, and I know the trend is up, other than the rotations. So the 9 a.m. high has a high probability of getting taken out, so I can buy counter rotations to take this out. And then eventually that, which we don't know about yet, because that's the first hour's high. So the long is supported. The long is supported statistically, and this is what gaming theory is about. I lost my place, but you get the idea. Now, 9:30 Central Standard Time is when the first hour, it's called the IB high. There's about I don't know, I'm going to guess, okay, because I'm not looking at the stats, around a 66% probability we take this out. However, the trend is up, right? For me, other than getting out for counter rotations or subject to skill, trading counter rotations into continuation trades or exiting and only taking continuation trades. You see how you can do this? This is my next target. And this. Let's see what it does. And what's my target? This was the last trade I think. No, it wasn't the last trade. So this is the target. So this is a sequence. Now, there's more. If you have questions, post them. I'll be able to look at them in a couple of minutes. VPOC migration. Really? What do we want to see happen? Retail price. Let's go. Not so much. So now what? Let's look. What is the condition of the market? Longs. Longs. What did we do? Target. Now, for me, target is horseshoes and hand grenades. This one, and this is being posted in Trader Lab, don't forget, is here. Now, I always get out a little bit ahead of these things, so just so you know. So here's my seller. Here's my absorption. Battle of the bands, iceberg, liquidity, no way to know. This comes in, notice the support. Anyway, I'm out of this thing. Now, here, I'm looking at this and I'm thinking we're going to continue, right? Who knows? VPOC migration. I'm going to label this, right? You've seen this before. Kind of important. And I have to label the one down below too, because that can be a target. Coming back. But we'll get to that. Actually, we won't get to it. Let's do it right now. Here. Now, it doesn't mean the market will ever come back here. You know, that's not the point. The reason I label these things is the market is an auction. That price was too low. If we find a price that's too high, we have a potential underlined to come back and check what was too low. Is this really too low? Is this really too high? Is this really too high? See, we don't know. So that's part of the joy. Now let's get back. So what we want to see happen is for this to keep going is to come here. What do I see? VPOC migration, seller, absorption here. We want to see it come back and clear this. What does it do? Sellers. This is a potential short or nothing. Notice the test back to here. Let's examine this. You'll see what I'm doing. I'm combining market mechanics, auction market theory, and order flow. What did it say? This is language. By the way, I don't use any indicators. You're going to say, really? No. I'm going to say, why? What's my indicator? It's participant behavior. There's a language being spoken by the participants. It's an auction. Now, I understand we use indicators as translators, just like Google Translate. The problem is, by the time you get the translation, the market's down here someplace. For me, I'm translating this. This is why I have an order flow tool, so I can see things before other traders. It gives me an edge. And in this business, you need everything you can get your hands on. That was too high. These buyers of that seller, because who wins? They got trapped. Now I have my volume here. Look to the right. You could see it. Seller. Into this guy. Support. Buyers take a shot. Uh-oh. But this is where my sellers are trapped. Watch. Whoop. Get over here. So buyers, sellers, seller. Buyer trapped up here. That's what we know. We don't know anything else. This comes in. I think this is the kind of thing that comes in. It's bait. In other words, retail traders see this, they get long. That's them right there. Maybe. What are they doing? They're taking the other side. That's selling absorption, passive selling into that buyer. So these guys are getting long. This is in here. Oh, it's lovely. What do? Sellers come in, they buy, and we take them out. Now we come back and we check. Is it too high? Sellers are here. Buyers are here. Here's my volume. This was the last chance. There's my test. That's a short. Pullback to this. That's a short. So you could be, and I narrated this in TraderLab. Where's my stops? Here. So this is a target. And there's more, but let's see what it does. This. So that's your target. So this trade, either you're out of your long, short into this, and this sets up another trade in the TraderLab. It's called the IB continuation trade. It is a long to come back here. Let me show it to you. So this is a long. We've got to clear this. I got scaled on this one, and I can't remember what. Oh, sweep, icebergs. This was the high volume up here. So it was a long, scaled, scratch the runner. Okay. Come back down under here, looking for another long. And now I'm going to go a little further. This is an outside edge of this distribution. Stops are under here. So this is a long in TraderLab, and you take it, and this is your target. And I always talk about trade management, So right here, who knows, right? So you just do your thing, trade management. So what do? We come outside, we take these guys out. Thanks for playing. Come outside, under here, watch. Sellers. Liquidity comes in the book right here. So we're using order flow, and we're looking to see who's trapped. Now we have a sell leg with buy stops. Does this make sense? Sellers, liquidity. Now we're watching. These sellers were absorbed. There's a buyer here. No, let's watch. Location. The trade we took over here that only got up here, this is the same trade. So let's look. So I have seller, some buyers in here, sellers. Now right here, these guys are the fuel if we can come above. Seller, buyer. That gets your antenna raised right there. Who's buying that thing? This in the book. You'll notice how it just jumps in. This is one thing about algos. You can't beat them, but if you understand the priority of inputs, the priority of input is this. And this is the location where stops will be underneath. Just the nature. And you would know this in your trade plan because you're in TraderLab, you know this already. Then it's a matter of anticipating to participate in a random environment. No. So it's not your job to predict. If you think you can predict what's going to happen next, send me a note. We'll talk. I spent years trying to predict things. I thought that was the business of trading. And it took me a long time to figure out that that's not the business of trading. That's our fantasy. I'm going to predict what's going to happen next. I know where the high of the day is. I know where it's going to go. Oh, let me use a Fibonacci extension. That tells me everything I need to know. Yeah, you and everybody else. Retail trader behavior. Does it work? Of course. Randomly. Everything is random. How about reducing the random inputs to the absolute minimum so you don't have conflict? So you have anchored inputs, not variable inputs. The only way you measure a process is if it's absolutely consistent. Just an opinion. Buyer. Watch. So right here is like a battle. You see it? Sellers, sellers, sellers. Now, what do I see here? Absorption. Back to this. Now it's either going to fall out or there's the buyers. Watch the fight. This is like a shootout. And I kind of mentally see it that way. You know, it's a shootout. These guys are like slugging it out. It's almost like rugby. You know, you ever seen a rugby match? Now that is hardcore. Forget the helmet and the shoulder pads. You know, that's for sissies. Test. Long. So you got long here, long here. And where are we trying to go? I know. You already know. Here. This is called mean reversion. It's the same trade as this. You're going for that. Didn't get there? More buy stops now because we got sellers here. We get our long. Where are we going? To take these guys out and get here. Okay? And where are we going? Here. And that's it. And I was done. Now I have no clue because I haven't seen any of this. Any questions, guys? How are we doing in YouTube, guys? Welcome to Trader Lab, by the way. If you're interested in what you see here, and I can assure you that what I am doing, you can learn it if you put the time and effort in, and there's no quick fix to building a business in trading. You've got to kind of go to school. And the Trader Lab really is about process. Almost think of it as process engineering. Reverse engineering processes, learning how the market works, and accepting you're in a random environment. It's no longer about you being right. It's no longer about curve fitting an indicator to fix what is defective, in my opinion. Indicators are great. The problem is they are not context sensitive. They are just buy, sell, and they're late. Does this say get short here? Does it tell you to get long here? Or does it get you long here? Where do you get long? Me? I want to get long here if I was getting long. So my risk is only here and I can get risk neutral. That's what I'm trying to say here. And I also know, just like you with your indicators, I'm in a random environment. Maybe I have a better shot. Here's the other thing. If I understand the environment I'm in and the context, maybe I deploy an indicator that aligns with the condition of the market and is sensitive and comes into alignment at certain places. Think about it. Just trying to see what's going on here. If I have something else I can show you. Anyway, this is the target. And this, look at this. You see how it's thickening up? Let me ask you a question. What are you going to do about that? Are you going to ignore it? Other traders who don't have a tool like this have no clue. We all have no clue, by the way. But the point is, maybe we have no clue with more information. That's all. Because when I say no clue, it's that randomness. It's not anything else. So these buyers are absorbed. Interesting. These buyers are absorbed. Interesting. VPOC migration. too low. I got to label this. You know, I got to do that. If I forget, I'm going to forget. And I don't want to forget that location. Why? The market speaks. I'm an interpreter. I speak the language. So are you. Now, most of us, we want the indicator to do the interpretation. Plug and play. And then we fantasize we're going to have an ATM in the basement. I'm going to suggest that's all it is fantasy. Just an opinion. You know, past performance, not indicative of future results. If this is too low and I leave it, I get my seller there, absorption. This shifts higher. This says too low. Then potentially push off. This is what this is saying. Now, the market, what does it try to do? What's too high? What's too low? What's retail? Is this price too low? Now, we don't know. Wish I knew. Don't know. What do I see? Sweep, selling icebergs. Don't forget, absorption. Buyers are being absorbed. Looking good, Lewis. Going to the moon, right? Selling, absorption, liquidity. Let's look a little closer. Seller, absorbed, sweep, looking for it. Now, I'm conscious of this and this and this. I'm conscious, but I'm unconscious as far as what will happen because I have no idea. I'm conscious of this. And until it breaks, it ain't broke. So let's look. So here, watching, iceberg sitting up here. This is the iceberg detector right here. There you go, by the way. Didn't even know where we were. So this here is what we have to observe. Okay? You're getting your sellers, you're getting your sellers. This is where the buyer is trapped. This is where the absorption was taking place. Buy absorption here, sell absorption here, shootout. Let's see. Iceberg hanging out, looking to sell. He may never get filled. It doesn't matter. This is a trade management opportunity, not a recommendation. We're above 5103, which was our main target. So we have to watch this very carefully. If we can push off, we can continue. If we fall back here, then, you know, the trade would be over, or sooner, actually, but that's up to you. Any questions? Caught up? Thanks for your patience. Gee whiz, I'm almost out of time. I got about 5 minutes, guys. How are we doing in YouTube? You get something from this? D'Angelo, the speedometers up there are basically, this shows the aggressor buying or selling. It's like tick strike in a way. This is showing the volume pressure imbalance. So it can show me extremes. It is an indicator. You can integrate it into Bookmap or, you know, as part of your plan if you want. They do align at times but they're not it's not a trading, you know, it's like any indicator, you know. Indicators have a place in trading, but the thing about all of this is where, how, you see? Hold on one second. One second, guys. Okay. This is in the market pulse. This is saying short. This is saying short. How do you know which one? It's saying short here. See? This is the thing about indicators. They don't stand alone. Does that make sense? Anyway, this trade would be over. Hope you got something out of this, guys. If you're interested, and by the way, if you're in YouTube, and I'm not done yet, by the way, please give a thumb up. It supports the channel and encourages Bookmap to keep the Trader Lab going. Also, the link in the bottom of YouTube is give you access to the Bookmap Discord Trader Lab chat. There's 60 PDFs of structured trades you can download. They look like this, circles, arrows, explanations of some of these processes. And I'm not a vendor. There's no cost for this. And I never put these together as a trading course. This is from 2020, and I was getting questions from a lot of traders. What are you doing? Here's what I'm doing. And I got so many requests that Bookmap thought it might be kind of an interesting thing to do is to ask me to stream, which they did. So I streamed. And in the so those you can download. You click the link in the bottom of YouTube. Also, this, so sets up a short. And what is it? Mean reversion. What we are doing is we're trading outside in. This is rotational trading. So if you have a plan for this is a short. When this fails up here, where are we going? Here. So you could sell this to there. Or, let me put it to you another way. You could buy this back to here. As they say, choose your pleasure or your pain, depending how you deal with it. So it's right here, these buyers got trapped. There's your seller. This is these guys, the sellers took over here, back to retail. Is this too low? Well, if it is, let's go back to where it was too high, which is here. So back to the volume, which is under here, right here. So if you got long, you got to scale right ahead of this, right there. And here's what's going to happen now. When I say going to, I'm going to say always, might happen now. That's too high. We came back and checked it. I'm not paying that. And we return here and go down, take these guys out. Or if this is too low, check, that's your scale, pull back, and then squeeze these sellers out. And I don't know what the answer is. I just know what might happen. That's why long, scale, hold, or long, scale, hold. Final questions. Thumb up in YouTube, please. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab chat and take advantage of all the no-cost education that's available in the Bookmap server. Stocks, large cap, small cap stocks, options, crypto, of course, order flow with a high-tier tool like Bookmap, swing trading, options, market maker behavior, algorithmic behavior, and a lot more. So this trade, so you understand, it's along to there. Bottom of the volume, where the sellers, you see? Is it logical? If these buyers can't push these guys out, then these guys are, as they say, going to see you later. Alligator, thanks for playing. And this is when your broker sends you a gift basket. But if it holds this, but it didn't get through here. So from a trade management point of view, just as a thought, if you took a long, you'd scale here. That's Trader Lab, and that's Trade Plan. Thanks for visiting the Trader Lab today, guys. Appreciate you taking the time. Please give a thumb up in YouTube on the way out. And remember, if you're in the Trader Lab, this stream is available exclusively to you for circles, arrows, screenshots, and review, and compare it to what your plan was and how you executed today. This is how we all get better. And I can assure you, whether you've been trading 6 months, 6 years, or like me, 44 years, every day I strive to get better. You're never going to be done. You're always going to want to get better. Even the best athletes on the planet go out on the court and practice and watch tapes and try to improve their game. Thanks again, guys, for visiting the Trader Lab. I look forward to seeing you tomorrow. Trade with a plan. If you don't have one, you might want to maybe sit on the other side of the table with the house and build a gaming business versus sitting with the gamblers. And of course, past performance is not necessarily indicative of future results. Visit the Trader Lab. Maybe we can help you on your journey. Thanks again. Look forward to seeing you soon.